Hello everyone, today I'd like to talk about share options, specifically EMI share options. EMI stands for Enterprise Management Incentive Share Options. So what is a share option? Well, it's a legally binding agreement to grant an option for an employee to exercise their right to acquire shares in the future. So they're not giving equity on day one, but they have a legally binding agreement subject to conditions that they must satisfy, that in the future they can acquire shares in a business, but based at today's price. So whatever the value of the business is worth today, they can buy in the future when hopefully the business is worth a lot more at today's lower price. So the rationale for doing that is to motivate key individuals in your business, such as a sales director or finance director, people that you would think will help you grow the business, so that ultimately when you sell the business, those key individuals share in the success as well as you, the founder of the business. So the share options can be written in such a way that they acquire the equity at certain points. So for example, after a year, the member of staff could receive some equity at that point, or then another year, another slice of equity, or everything could be written into the contract to say that the employee acquires the shares at the back end. That is when the business is sold. So the incentive then is for the employee that they know that they will receive hopefully a big payday when the business is sold in a few years' time, and it will cost them considerably less to buy in. So they will buy in their percentage, let's say it's 10%, they will buy and sell on the same day, and hopefully they've made a considerable gain. Now, from a tax perspective, entrepreneurs relief should apply, even though normally you have to hold the shares for 2 years, and in this case they might have only held the shares for 2 hours. But the rules say that the clock starts when the shares are granted, not when they are exercised. So when the options are granted, which is now on day one, many years before the sale of the business. So the clock starts for entrepreneurs relief from the day of the grant. There is also no income tax for the employee when they exercise the shares, so long as the exercise price is no less than the market value at the date of the grant. And there's also tax breaks for the employer. So in the final period before the business is sold, the company gets a tax deduction based on the difference between the exercise price that the employee buys in for and the market value of the shares at that date. So it's a win-win situation for both the employee and for the employer. A crucial incentive for key personnel. And the beauty of the EMI option is that it doesn't have to be available to all of the staff. You can give the EMI options to selected key individuals who you think will assist you in the business.